Hi dear, welcome to Trader's Mind Code. From zero to crypto millionaire, beginner to pro. Why read this book? This book is your complete guide to transforming from a crypto beginner to a confident, savvy investor. Whether you're just starting or looking to sharpen your skills, it breaks down complex concepts into easy to understand steps, helps you avoid costly mistakes, and equips you with strategies to build lasting wealth. Dive in to unlock the secrets of the crypto revolution and take control of your financial future. Introduction: the crypto gold rush of our time. Welcome to From Zero to Crypto Millionaire, Beginner to Pro, the journey that could reshape your financial future. This isn't just another book about crypto. It's a roadmap, a real, practical guide for anyone starting with nothing but curiosity and the desire to build wealth in a new digital world. But let's clear something up right now. You are not too late. Despite what the news says, despite the hype and the noise, the truth is simple. We're still early. In fact, the greatest wealth-building opportunity of our generation is unfolding right now. And you're about to step into it. Why this book and why now? To understand why this moment matters, let's take a quick look back. In the 1800s, thousands rushed to California in search of gold. Some found it, many didn't. But one thing is certain: the opportunity was real, and it changed the world. Today, we're living through a digital version of that gold rush. Only this time, the gold is code. The rivers are blockchains, and the tools aren't pickaxes or wagons. They're smartphones, internet access, and knowledge. And the best part? You don't need permission. You don't need to be rich. You don't even need to know where to begin. That's what this book is here for. The power shift has already begun. Everything around us is changing. Banks are being challenged. Middlemen are being removed. Institutions are trying to catch up with innovations they can barely understand. For the first time in history, money is becoming borderless, permissionless, and programmable. Cryptocurrency is more than just digital money. It's a movement, a rebellion against the old system. It offers ownership, freedom, transparency, and it gives ordinary people the power to play the same financial games that used to be reserved for the elite. You don't need a finance degree. You don't need to trade full-time. All you need is a willingness to learn. And the truth is, those who take the time to understand crypto today will be the ones leading the financial world tomorrow. Who this book is for? This book is for the beginner, the curious, the person who's heard about Bitcoin, Ethereum, or NFTs, but never fully understood them. It's for the working professional, the student, the hustler, the skeptic, anyone who's tired of sitting on the sidelines while others seem to be getting ahead. That if you've ever felt overwhelmed by technical jargon or nervous about investing in something new, you're not alone. And you're not behind. You're exactly where you need to be. This is your starting point. From zero to what you'll learn what cryptocurrency really is and why it matters. You'll learn how to buy your first coin safely. You'll discover strategies that don't require high risk or insider knowledge. And you'll learn how people are turning small investments into serious returns by thinking differently and acting strategically. That will break everything down in simple language. No fluff, no hype, just clarity. Because understanding crypto isn't about chasing the next trend. It's about seeing the future and positioning yourself to grow with it. The real goal, let's be honest, most people approach crypto the wrong way. They treat it like a lottery ticket. They follow social media influencers. They jump into coins with no idea what they're doing, and they get burned. This book isn't about gambling. It's about learning how to build real wealth. That means thinking long-term. It means protecting your capital, not just chasing profits. And it means becoming someone who isn't shaken by hype, fear, or market noise, but someone who moves with purpose and clarity. By the end of this journey, you won't just know how crypto works. You'll know how to use it with confidence. You'll go from a curious beginner to someone with the mindset, strategy, and tools of a future crypto millionaire. Ask yourself, if not now, when? The opportunity is here. The timing is right. And your journey starts today. Let's begin. What is cryptocurrency, really? Let's strip away the hype, the jargon, and the headlines for a moment. Because before you invest your time, your energy, or your money into crypto, there's one simple question you need a clear answer to. What is cryptocurrency, really? Most people think crypto is just digital money. Some think it's a scam. Others believe it's too technical to understand. But here's the truth. Cryptocurrency is not just a form of money. It's a revolution in how we define, use, and control value in the digital age. Let's break it down. The birth of a new system in 2008, the world was in chaos. Major banks were collapsing. The global financial system, which many had trusted without question, was exposed for what it really was: fragile, centralized, and manipulated by a few powerful players. Out of that crisis came something unexpected today. White paper was published by an anonymous figure using the name Satoshi Nakamoto. In just 9 pages, Satoshi introduced a new kind of money, one that didn't rely on banks, governments, or middlemen. This was the beginning of Bitcoin, and with it, the birth of cryptocurrency. What is cryptocurrency? Cryptocurrency is a digital form of money. But unlike dollars, euros, or yen, it's not issued by a central bank. Instead, it runs on something called blockchain technology, a system that allows people to send, receive, and store value securely without needing a third party. Think of it like this. If the traditional financial system is a giant building controlled by banks, then cryptocurrency is an open highway, available to anyone, anywhere, 24 hours a day, without permission. At its core, crypto is decentralized. No single authority controls it. Transparent. Every transaction is recorded publicly on a ledger. Limited in supply. Most cryptocurrencies have a fixed or predictable supply, unlike fiat money that can be printed endlessly. Secure. Protected by powerful cryptographic algorithms. The role of blockchain now, let's talk about the engine that makes all of this possible. The blockchain. Imagine a notebook that keeps track of every transaction ever made, but instead of being stored in one place. Copies of this notebook exist on thousands of computers all over the world. That's the blockchain. It's a digital ledger distributed across a network of computers called nodes. Every time a transaction is made, it's added to the ledger. And because it's spread out and constantly updated, it's almost impossible to hack, alter, or fake. In other words, it's trust without trusting anyone. This simple yet powerful technology has implications far beyond just money, but more on that in later chapters. Bitcoin versus other cryptocurrencies. Bitcoin was the first. It's still the most valuable, the most secure, and the most widely recognized. But since its launch, thousands of other cryptocurrencies have been created. Some are legitimate innovations. Others are speculative experiments. A few are outright scams. Here are a few of the most well-known. Ethereum, not just a currency, but a platform for building decentralized applications called dApps. It introduced the concept of smart contracts, which are self-executing agreements written in code. Solana, Cardano, Avalanche, competing platforms trying to offer faster, cheaper, or more scalable versions of Ethereum's vision. Stablecoins, like USDT or USDC. These are cryptocurrencies designed to stay pegged to the value of the US dollar. Meme coins, Dogecoin, Shiba Inu, and others, often driven more by culture and community than real utility. The key takeaway? Not all cryptos are created equal. Some will rise, most will fall. Your job as a future crypto millionaire is to learn how to separate real innovation from hype. And that begins with education. Why crypto matters now, you might be wondering. Why do we even need cryptocurrency in the first place? The answer is simple. The current financial system is outdated. It's slow. It's expensive. It's exclusive. And it gives power to a tiny group of institutions who decide the rules for everyone else. Crypto flips that model upside down. It gives people control over their own money, access to global markets, protection against inflation and currency collapse, the ability to participate in a new kind of economy, open, borderless, and digital for people in countries with unstable currencies or limited access to banks. Crypto isn't just a tool, it's a lifeline. For investors like you, it's a once-in-a-generation opportunity to get in early on a technological shift that's still in its early chapters. Common misconceptions. Let's address a few of the biggest myths that keep people from getting started. It's just a scam. Yes, scams exist, just like in any industry. But crypto itself is a tool. And like any tool, it can be used well or poorly. The key is learning how to use it safely and smartly. It's too volatile. True, crypto prices swing wildly. But Volatility also creates opportunity, especially for those who are patient, disciplined, and educated. It's too late to get in. The truth? We're still early. Mass adoption hasn't happened yet. The next wave of innovation is just beginning, and the next decade will be shaped by those who start learning now. Final thoughts: cryptocurrency isn't just a new kind of money. It's a new kind of system, one that offers opportunity, freedom, and ownership in a way the traditional financial world never could. But like any powerful tool, you need to know how to use it to in the chapters ahead. We'll take you step by step through everything you need to know, from setting up your first wallet, to building a portfolio, to earning passive income, and eventually building wealth that can last a lifetime. This isn't just about riding the wave. It's about understanding the current, so you can swim with purpose and get to where you want to go that you've just taken your first step. Now let's keep moving forward. Why people are getting rich with crypto? There's a reason crypto has become one of the most talked about topics in the financial world. It's not just because it's new. It's because it has produced wealth faster and at a larger scale than almost any other financial technology in history that you've probably heard the stories. A teenager who bought a few dollars worth of Bitcoin in 2013 is now financially free. An early investor in Ethereum turned a modest investment into millions. Even meme coins like Dogecoin and Shiba Inu created overnight millionaires during their peak. So what's really going on here? Is it just luck? Is it just hype? Or is there something deeper behind the headlines? In this chapter, we'll break down the real reasons why people are getting rich with crypto, and how you can start to position yourself wisely in this emerging economy. The digital wealth shift. Let's start with a basic truth. Every few decades, a major wealth shift happens in the past century alone. We've seen the rise of stocks in the 1920s, the explosion of real estate after World War II, the boom of internet companies in the early 2000s, and now the crypto revolution. In each of these waves, the people who got in early, before the rest of the world understood the value, were the ones who made the biggest gains. Crypto is not a get-rich-quick scheme, but it is, without question, a get-rich-earlier opportunity. Asymmetric risk, small in, big out. There's one of the key reasons people are getting rich with crypto. Asymmetric risk. In simple terms, asymmetric risk means you can risk a little and potentially gain a lot. Let's say you invest $100 into a new cryptocurrency project. The most you can lose is $100. But in the world of crypto, it's not uncommon for a project to 10x, 50x, or even 100x in value if it gains adoption. This means your $100 could become $1,000, $5,000, or more. While your downside is still limited, that type of risk-reward ratio doesn't exist in traditional markets, at least not for everyday people. And that's exactly why so many regular people, not just hedge funds or tech CEOs, have seen life-changing gains. Early adoption pays. Think about companies like Amazon, Apple, or Google. What do they all have in common? They were undervalued, misunderstood, and underestimated in their early years. The people who saw their potential and invested early became incredibly wealthy. The rest of the world only caught on once the biggest gains were already made. Crypto is the same story, just happening faster. We are still in the early adoption phase. Most people don't fully understand how it works. Governments are still figuring out regulations. Many major banks are still trying to catch up. That's your signal. Because once everyone understands it, the window of massive opportunity will have already closed. 24/7 global market access. Unlike traditional stock markets, crypto runs 24 hours a day, 7 days a week. Across every country on Earth, there's no closing bell, no gatekeepers, no need for a broker to approve your trades. This means that anyone, anywhere, from New York to Nairobi to New Delhi, can participate equally. Crypto is the most inclusive financial system ever built. It doesn't ask for your background. It doesn't care about your credit score. It doesn't judge your education. If you have internet access, you can be part of the movement. That's a level playing field the world has never seen before. And it's unlocking wealth in places most investors never thought to look. The network effect. Another reason people are getting rich with crypto is because of something called the network effect. Simply put, the more people who use a system, the more valuable that system becomes. Take Ethereum, for example. The more developers build apps on Ethereum, the more users are attracted. The more users, the more demand for ETH. And the more demand, the higher the price goes. Crypto rewards participation. The people who support good projects early by using them, investing in them, or spreading the word are often rewarded later when the value of the network grows. This is how communities build wealth together. And it's why timing, research, and involvement matter more in crypto than in almost any other asset class. Decentralized finance, DeFi, and passive income. Will dive deeper into this in a later chapter, but for now, here's what you need to know. People aren't just getting rich by buying and holding. They're also earning passive income through something called DeFi, or decentralized finance. With DeFi, you can lend your crypto and earn interest, provide liquidity, and collect trading fees, stake your coins, and earn rewards, farm new tokens with yield strategies. It's like becoming your own bank, with no middleman taking a cut. These are not just opportunities to grow your wealth. They're ways to generate income, even while you sleep. The community factor, another reason people are winning big in crypto. Community. Unlike traditional finance, where the systems are closed and controlled, crypto is open source and grassroots driven. Communities form around projects, share research, build tools, and hype each other up. In some cases, it's these communities, not companies, that drive massive growth and adoption. Being part of the right community gives you access to information, momentum, and opportunities that the mainstream media hasn't even noticed yet. Not everyone wins, but you can now. Let's be honest, not everyone gets rich with crypto. Some people buy high and sell low. Some fall for scams. Some never take the time to learn. But here's the difference between the winners and the losers: education and discipline. This book isn't about throwing money at coins and hoping something sticks. It's about giving you the tools, the mindset, and the strategy to build wealth steadily, smartly, and with confidence. And that starts with understanding why this space is creating so much wealth in the first place, and how to navigate it with a cool head while everyone else is chasing hype. Final thoughts: people are getting rich with crypto because they've positioned themselves in front of a tidal wave of change. They understand the technology. They respect the risk. And most importantly, they act before the crowd. You can be one of those people, but it won't happen by chance. It will happen by choice. Through the decisions you make starting today. In the next chapter, we'll dive deep into how to build the right mindset for this journey. Because having the right information is only half the battle. To succeed in crypto, you also need to think differently. Like an investor, like a builder, like someone who's not here for a quick flip, but for real freedom. Let's continue. Setting the foundation. Your crypto mindset. Before we talk about buying your first coin, choosing a platform, or analyzing a chart, there's something even more important we need to focus on: your mindset. Because here's the truth most people never hear. Crypto is not just about technology or money. It's about psychology. In a space where prices rise and fall like roller coasters, and emotions can destroy a portfolio faster than any market dip, your mindset becomes your most valuable asset. In this chapter, you'll learn how to think like a crypto millionaire long before you become one, by building the mental foundation that separates those who thrive from those who panic, quit, or self-sabotage. Why mindset matters more than strategy. You can have the best strategy in the world, but if your emotions control your decisions, you'll fail. You'll chase hype. You'll sell in fear. You'll hold on to losing investments because you don't want to admit you were wrong. Sound familiar? The people who build real wealth in crypto and keep it are not just those who know the most. They're the ones who think long-term, stay calm under pressure, and stay consistent when others get distracted. Mindset is what gives you that edge. Shift number 1. From consumer to investor. Most people go through life as consumers. They spend money. They chase comfort. They seek instant rewards. But investors? They play a different game. Investors look ahead. They delay gratification. They take calculated risks for long-term gain. To succeed in crypto, you need to shift from a spending mentality to a building mentality. Every dollar you invest becomes a seed, not a cost. Ask yourself, is this choice getting me closer to the life I want, or just giving me another dopamine hit today? This simple shift will change how you approach everything, from your trades to your time management. Shift number 2. From short-term noise to long-term vision. Let's face it, crypto moves fast. One tweet can send a coin soaring. One news headline can cause panic. But here's the reality. None of that matters if you're playing the long game. Ask yourself, will this matter in 5 years? Or is it just noise? The people who got rich from Bitcoin didn't panic every time it dropped 30%. They understood cycles. They trusted the trend. They zoomed out. Crypto is volatile, but long-term, it has consistently rewarded patience and conviction that that's the mindset you need. Don't aim for overnight success. Aim for strategic progress over time. Shift number 3. From emotion to data, markets are made of two things: numbers and emotions. Most people focus on one and ignore the other, but smart investors use data, not feelings, to make decisions. Before you buy, ask, what problem does this project solve? Does it have a strong team and community? Is there real use case or adoption? What's the supply, demand, and tokenomics? Feelings are unreliable. Hype fades. FOMO lies. But data gives you clarity that you'll never eliminate emotion entirely. But you can learn to pause, breathe, and decide with logic instead of fear or greed. Shift number 4. From victim to owner. One of the most powerful mindset shifts in crypto and in life is ownership. Crypto puts the power in your hands. That means the responsibility is in your hands too, that if you lose money, it's not the market's fault. If you make a bad trade, it's not the influencer's fault. If you fall for a scam, it's not the scammer's fault. Not entirely real. Wealth builders take responsibility that you're not a victim. You're a student, and every mistake is a lesson. That doesn't mean you have to be perfect. It means you have to own your decisions, learn from them, and keep moving forward. Shift number 5. From spectator to participant. Reading books and watching videos is a great start, but action is what creates transformation. In crypto, there are two types of people: spectators, who watch the charts, the news, the influencers, and stay on the sidelines; participants, who take small steps, learn by doing, and evolve with the space. That don't wait until you know everything. You never will. Start with a small investment. Try using a wallet. Join a project's community. Stake a token. These small actions create confidence, and that confidence builds momentum. Your wealth won't come from passive knowledge. It will come from intentional action. Practical tips for developing a strong crypto mindset. Let's make this real. Here are some simple daily habits that will help you build and maintain the mindset of a successful crypto investor. Daily education. Read one article, watch one quality video, or listen to a podcast episode each day. Consistent learning compounds over time. Set rules before you invest. Decide your entry, your exit, and your risk limit before you make a move. Don't wing it. Use a journal. Track your thoughts, decisions, wins, and losses. This will teach you more than any course ever could. Control your environment. Unfollow hype-driven accounts. Join communities that focus on research, not speculation. Detach from price. Instead of obsessing over daily price changes, focus on the bigger picture. How is your strategy evolving? Celebrate discipline, not just profit. Your biggest win might not be a big trade. It might be staying calm during a crash or walking away from a bad decision. The inner game comes first. Before you master charts, before you understand tokens, before you make your first big gain, you must master yourself. Because in crypto, the biggest enemy isn't the market. It's the investor who reacts without a plan, chases without thinking, and gives up at the first sign of fear. But that's not going to be you. You're here to play the long game. You're here to win with wisdom. You're here to think like a pro, even as a beginner. This is your foundation. Now, let's build the structure, starting with your first real steps into the market. In the next chapter, we'll walk through everything you need to know to set up your accounts, secure your assets, and make your very first investment safely, confidently, and with clarity. Setting up for success. Now that you understand the mindset required to navigate the crypto world, it's time to take the first practical steps. This chapter will guide you through setting up your accounts, securing your assets, and making your entry into the world of cryptocurrency both safe and effective. The importance of starting the right way. Imagine building a house. Would you start with the walls or the roof? Of course not. You'd start with the foundation. Getting started in crypto works the same way. If your foundation isn't strong, if your accounts aren't secure, your tools aren't reliable, and your knowledge isn't clear, everything you build on top of it is at risk. Setting up the right way ensures you avoid costly mistakes, unnecessary stress, and the frustration of starting over. Step 1. Choosing the right exchange. Your first step is to select a cryptocurrency exchange, the platform where you'll buy, sell, and trade cryptocurrencies. Think of it as your gateway to the crypto world. There are hundreds of exchanges, but not all are created equal. When choosing an exchange, consider the following key factors to consider. Reputation and trustworthiness. Look for exchanges with a solid history and positive reviews. Examples: Binance, Coinbase, Kraken, and KuCoin. Avoid lesser-known platforms unless you've done extensive research. Ease of use. As a beginner, you'll want an exchange with a user-friendly interface. Complicated platforms can lead to costly mistakes. Security features. Does the exchange offer two-factor authentication, 2FA? Does it have insurance for stored assets? How does it handle data breaches? Supported cryptocurrencies. Make sure the exchange supports the coins you're interested in. Fees. Understand the fee structure for buying, selling, and withdrawing assets. Some platforms charge higher fees for convenience. Regulation and availability. Ensure the exchange operates legally in your country and complies with local regulations. Recommended beginner exchanges. Coinbase, excellent for beginners, simple and secure. Binance, great for variety and low fees, slightly more advanced. Kraken, strong security and reliable for long-term use. Step 2. Creating your wallet. After setting up your exchange account, the next step is securing your assets with a crypto wallet. What is a crypto wallet? A wallet is a digital tool that allows you to store, send, and receive cryptocurrencies. Think of it as a safe for your digital money. Types of wallets. Hot wallets connected to the internet. Examples: mobile apps like Trust Wallet or MetaMask. Ideal for small, frequent transactions. Cold wallets not connected to the internet, making them more secure. Examples: hardware wallets like Ledger or Trezor. Best for long-term storage of significant amounts. Pro tip: never leave large amounts of crypto on an exchange. Exchanges are targets for hackers. A secure wallet ensures your funds remain under your control. Step 3. Securing your account's. Crypto offers financial independence, but it also comes with personal responsibility. Unlike traditional banks, there's no forgot password button that can recover lost assets. Steps to secure your accounts. Enable two-factor authentication, 2FA. Use an app like Google Authenticator for an extra layer of security. Create strong, unique passwords. Use a password manager to generate and store complex passwords. Back up your wallet keys. Your wallet will provide a seed phrase, a set of 12 to 24 words. Write it down on paper and store it in a safe place. Never share it digitally. Beware of phishing scams. Always verify URLs before logging into your account. Double-check emails claiming to be from your exchange. Avoid public Wi-Fi. Only access your accounts from secure, private networks. Step 4. Funding your account. Once your accounts are secure, it's time to add funds. You'll need to deposit fiat currency, like USD, Euro, or BDT, into your exchange account. Funding methods. Bank transfers, typically the cheapest method, but may take a few days. Credit/debit cards, instant, but often come with higher fees. Peer-to-peer, P2P, allows you to buy crypto directly from other users, often at lower costs. Pro tip: start with a small deposit to test the process before adding more funds. Step 5. Making your first purchase. Now comes the exciting part: buying your first cryptocurrency. Recommended coins for beginners. Bitcoin, BTC, the original cryptocurrency, reliable and widely adopted. Ethereum, ETH, known for its smart contract capabilities and massive ecosystem. Stablecoins, e.g., USDT, USDC, pegged to fiat currencies, great for stability. How to buy. Navigate to your exchanges Buy Sell section. Choose your desired cryptocurrency. Select your payment method and confirm the purchase. Pro tip: start small. A $10 to $50 investment is enough to get familiar with the process. Step 6. Moving crypto to your wallet. After purchasing crypto on an exchange, transfer it to your wallet for safekeeping. This step ensures that you have full control of your assets. How to transfer. Open your wallet and find your public address. Copy the address and paste it into the withdraw section of your exchange. Double-check the address before confirming. Wait for the transaction to be processed on the blockchain. Step 7. Tracking your portfolio as your investments grow. Keeping track of your portfolio becomes essential. Tools to use: CoinGecko or CoinMarketCap for real-time price tracking and market data. Portfolio apps like Blockfolio or Delta to organize and monitor your holdings. Pro tip: don't check prices obsessively. Set specific times to review your portfolio to avoid emotional decisions. Final thoughts: setting up for success in crypto isn't complicated, but it does require care and attention to detail. Why choosing the right exchange, securing your assets, and starting with small, calculated steps. You're laying the groundwork for a safe and successful journey. In the next chapter, we'll dive into your first investment strategies, exploring concepts like dollar cost averaging, diversifying your portfolio, and choosing the right projects. For long-term growth, you've taken the first practical steps. Now it's time to start building your first investment. Congratulations. If you've made it this far, you're already ahead of most people. You understand what cryptocurrency is. You've built the right mindset. You've set up your exchange and wallet. Now it's time to take the leap. This chapter is all about making your first crypto investment the smart way. No hype, no guessing. Just a calm, clear strategy that's built for beginners who want long-term success. Let's walk step by step through everything you need to know. Why start small? It might be tempting to jump in head first, especially after hearing stories of people turning small investments into massive gains. But the smart move is to start slow and small. Why? First, crypto is volatile. Prices swing wildly. Starting small helps you learn without stress. Second, you need time to build confidence and skill. Every great investor was once a beginner. And third, it's not about how fast you start. It's about how long you last. In this world, consistency beats speed. Start with an amount that, if lost, wouldn't affect your life. That could be $10, $50, or $100. It's not the amount that matters. It's the habit of smart investing. Choosing the right coin. Your first investment should go into proven, reliable assets, not hype-driven coins promising unrealistic returns. Here are 3 smart options to begin with. 1. Bitcoin, BTC, the original cryptocurrency. Most secure, most widely adopted. Think of it like digital gold, a long-term store of value. 2. Ethereum, ETH, the foundation of decentralized apps, smart contracts, and most Web3 projects. Great growth potential, but slightly more complex than Bitcoin. Think of it like digital oil. It powers a huge part of the crypto ecosystem. 3. A stablecoin, like USDT or USDC, pegged to the US dollar, so it doesn't fluctuate like Bitcoin or Ethereum. Useful if you want to stay in crypto without dealing with volatility. Think of it like cash, but digital. If you're just getting started, consider investing in Bitcoin or Ethereum, or a mix of both. These are the most established, and they're where most beginners begin. Strategy number 1, dollar cost averaging, DCA. One of the most powerful and beginner-friendly strategies is called dollar cost averaging, or DCA. Here's how it works. Instead of investing all your money at once, you break it up and invest small, fixed amounts on a regular schedule, weekly, bi-weekly, or monthly. For example, $25 every Friday, $100 on the first of every month. This strategy removes emotion from the equation. You're not trying to time the market. You're simply building your position over time at an average price. DCA protects you from buying at the top, panicking during dips, making impulsive decisions, and over time, it can lead to strong, steady growth, especially in long-term assets like Bitcoin and Ethereum. Strategy number 2, lump sum investing. Lump sum investing means putting all your investment capital into the market at once. It works best when you've done solid research, you're confident in the asset, you're prepared to hold long-term and ride out volatility. Lump sums are riskier in the short term, especially in a volatile market like crypto. But if the timing is right, it can lead to higher gains faster. As a beginner, it's often better to start with DCA and then move into lump sum investing once your experience grows, diversifying without overcomplicating when it comes to your first investment. Simplicity is your friend. Don't rush to buy 10 different coins just because they're trending. Start with 1 to 3 strong, reputable assets and build from there. A good beginner portfolio might look like 60% Bitcoin, 30% Ethereum, 10% stablecoin. For flexibility or future opportunities, as you learn more, you can diversify into other projects. But in the beginning, focus on quality over quantity. How to actually buy. Let's walk through the simple steps of buying your first coin. Log into your exchange account, like Coinbase or Binance. Navigate to the Buy or Trade section. Select the cryptocurrency you want to purchase. Choose your payment method, fiat balance, card, or bank. Enter the amount you want to invest. Review the transaction and confirm. That's it. Once completed, the crypto will appear in your exchange wallet. If you want extra security, transfer it to your personal wallet using the method you learned in the last chapter. What to expect after buying. After you make your first investment, something interesting might happen. You might feel nervous. You might check the price 10 times a day. You might feel excited or afraid. That's normal. But remember, this is not a lottery ticket. It's a foundation. You're not here to get rich overnight. You're here to grow steadily, wisely, and securely. How to track your progress. Here's how to stay in control after you invest. Check your portfolio weekly, not hourly. Use tools like CoinGecko, CoinMarketCap, or Delta to track your holdings. Log your investments and decisions in a journal. This helps you improve over time. Celebrate your discipline, not just your profit. The goal isn't to have perfect timing. The goal is to build confidence through action, and you've just taken the most important step. Final thoughts. Your first investment is more than just a transaction. It's a signal. It says, I'm in this game now. It says, I believe in myself and the future I want to build. Most people never get this far. They hesitate. They overthink. They wait for the perfect time, but you didn't wait. You took action, and that simple decision, to start, is what separates the people who dream from the people who achieve. In the next chapter, we'll explore market cycles, so you'll know how to handle both the bull markets and the bear markets without panic, confusion, or regret. Understanding market cycles. Now that you've made your first investment, it's time to talk about one of the most important and misunderstood parts of crypto investing: market cycles. Most people lose money in crypto not because they choose the wrong coins, but because they don't understand the rhythm of the market. They panic during dips. They chase hype at the top. They sell too early or buy too late. This chapter will teach you how to read the cycle, stay calm through the chaos, and make decisions based on structure, not emotion. Let's break it down. What is a market cycle? A market cycle is the natural rise and fall of prices over time. It happens in all markets: real estate, stocks, commodities. But in crypto, it happens faster and more dramatically. A typical crypto market cycle has 4 main phases: accumulation uptrend, bull market; distribution downtrend, bear market. Let's go through each one and learn how to recognize and respond to them. Phase 1. Accumulation, the quiet beginning. This is where the cycle begins, and it's also where the smart money starts buying. Prices are low. There's little public interest. News outlets are calling crypto dead. But behind the scenes, experienced investors and insiders are quietly accumulating. This phase often happens after a major crash or correction. It can last for months or even years. Your strategy during accumulation: buy slowly and consistently. Dollar cost averaging works well here. Ignore the noise. Focus on education and long-term positioning. Remember, wealth is built in silence. By the time the public gets excited, the accumulation phase is over. Phase 2. Uptrend, the bull market. This is when things start to heat up. Prices begin rising steadily. Positive news floods social media. Retail investors, that means every day, people start entering the market. Excitement builds, and momentum accelerates. At first, the growth feels reasonable. But then something shifts, and prices start rising faster than fundamentals can explain. This is where FOMO, fear of missing out, kicks in. Projects you've never heard of are doubling in value overnight. Influencers are calling for $100,000. Bitcoin, your friend who never cared about investing, is suddenly asking how to buy Shiba Inu. Your strategy during a bull market: take profits on the way up. Don't try to time the exact top. Stick to your plan. Greed will tempt you to chase risky coins. Diversify, and don't overexpose yourself. Stay focused. This is when discipline matters most. Pro tip: set exit targets in advance. For example, I'll sell 10% of my ETH if it hits $3,000, and another 20% if it hits $4,000. This helps you stay rational when others are losing their minds. Phase 3. Distribution, the top. This is where the smart money sells, and most beginners are still buying. The market is overheated. Valuations no longer make sense. Social media is euphoric. Everyone thinks prices will keep going up forever, but underneath that excitement, momentum is slowing. Volume is dropping. Early signs of reversal begin to appear. This is the most dangerous phase for beginners because it feels like everything is still good until it isn't. Suddenly, a few red candles appear. Then more. The crash begins, and it's fast. Your strategy during distribution: be cautious. Watch for signs of weakening trends. Avoid chasing pumps. Lock in profits and rotate into stable assets or cash. Don't get emotional if you miss a final move upward. Protecting your gains is more important. N01 rings a bell at the top. But if you're watching closely, you'll feel the shift. Pay attention to volume, sentiment, and irrational behavior. Phase 4. Downtrend. The bear market. This is the part no one wants to talk about, but it's where most wealth is actually built. Prices fall hard. News headlines say crypto is a scam. People disappear from social media. Those who entered late are now selling in fear, often at a loss. This is the bear market, and it's emotionally brutal. But if you understand the cycle, you won't be surprised. In fact, you'll welcome it. Your strategy during the bear market: don't panic sell if your fundamentals are strong. Accumulate slowly, focusing on top-tier projects. Refine your skills, read more, study past cycles. Zoom out. These cycles have happened before, and they will happen again. Smart investors accumulate in the bear, sell in the bull. But most beginners do the opposite. Be the exception. The role of Bitcoin in the cycle: Bitcoin doesn't just lead the market, it drives it. Most bull and bear markets in crypto follow Bitcoin's halving cycles, which happen approximately every 4 years. Here's how it works. Every 4 years, the amount of new Bitcoin created gets cut in half. This reduces supply, and historically, it has led to massive bull runs within 12 to 18 months. Let's look at the pattern. 2012 having 2013 bull market, 2016 having 2017 bull market, 2020 having 2021 bull market, 2024 having. No one can predict the future perfectly, but understanding these patterns helps you stay prepared, not surprised. Emotional mastery during the cycle markets are a mirror. They reflect back your fears, your greed, your confidence, and your discipline. To win in crypto, you must master your reactions, your expectations, your self-control. Here's how to stay grounded. Don't check prices every hour. It fuels anxiety. Turn off social media hype during emotional peaks. Stick to your plan, especially when it's hardest. Celebrate discipline, not just gains. You'll never eliminate emotion completely, but you can train yourself to respond instead of react. Final thoughts: market cycles are not a mystery. They're not random. They follow a pattern. And if you study that pattern, you can navigate it with clarity and confidence. Remember, the crowd buys high and sells low. The pros buy low and sell high. Your edge is not just in what you buy, but in when and how you act. You can't control the market, but you can control your behavior, your strategy, and your preparation. In the next chapter, we'll look at how to move from investor to pro-level decision maker with the skills to trade, manage risk, and grow your portfolio intentionally. You're not just watching the cycle anymore. You're learning how to ride it. From trader to pro investor. Up to this point, you've learned the basics: what crypto is, how to set up your accounts, make your first investment, and understand market cycles. Now, it's time to elevate your approach, to go from a casual trader or beginner investor into a pro investor with a clear strategy, disciplined mindset, and powerful tools. This chapter is about mastering the transition from reacting to the market to controlling your financial future with precision, patience, and professionalism. The difference between a trader and an investor. First, let's clarify the terms, because many people confuse them. Trader: someone who buys and sells crypto frequently, often trying to profit from short-term price fluctuations. Traders rely on timing, technical analysis, and quick decisions. Investor: someone who builds wealth over time by holding quality assets, focusing on long-term growth, and making strategic decisions based on fundamentals and market cycles. Both roles have value, but the pro-investor mindset combines the best of both worlds, using data, strategy, and emotional discipline to maximize gains and minimize risks. Developing a pro-investor mindset. What separates pro-investors from casual traders? Discipline over emotion. Pro investors do not let fear or greed drive their decisions. They follow predefined plans and stick to their strategies even during market turbulence. Strategic patience. They understand that building wealth takes time. They don't chase every pump or panic during every dip. Risk management professionals calculate how much they can afford to lose on every trade or investment, and they never risk more than that. Continuous learning. The market evolves, and so do pro investors. They study trends, technologies, and new projects to stay ahead. Building a trading plan. Whether you lean toward trading or investing, a trading plan is essential. It acts as your roadmap, helping you make rational decisions even when emotions run high. Here's what a solid plan includes. Entry criteria: when and why will you buy? Exit criteria: when will you sell, take profits, or cut losses? Risk tolerance: how much are you willing to lose on a single trade? Position size: how much of your portfolio will you allocate? Time horizon: are you holding for days, weeks, months, or years? Write your plan down and review it regularly. When you have a plan, you're less likely to be swayed by hype or fear. Tools of the pro investor. Pro investors don't rely on guesswork. They use tools to analyze and manage their portfolios. Technical analysis, TA. TA involves studying price charts, volume, and patterns to predict future movements. Key concepts include support and resistance levels, price points where coins tend to bounce or reverse. Trend lines, lines that show the direction of the market, up, down, or sideways. Indicators, tools like RSI, Relative Strength Index, or MACD, Moving Average Convergence Divergence, that provide clues about momentum or overbought/oversold conditions. You don't need to become a TA expert overnight, but learning the basics can help you make more informed decisions. Fundamental analysis, FA. FA focuses on the intrinsic value of a project. It involves assessing the team behind the project, understanding the problem the coin solves, evaluating the project's technology and roadmap, looking at partnerships and adoption, analyzing tokenomics, supply, demand, inflation. Fundamental analysis helps you identify strong projects worth holding through ups and downs. Risk management. Your safety net. Risk management is the most important skill you can develop. Key rules: never invest more than you can afford to lose. Use stop-loss orders to automatically sell if a coin drops below a certain price. Diversify your portfolio to reduce risk exposure. Avoid emotional trading. Set limits and stick to them. Remember, preserving your capital is more important than chasing big wins. You can't make money if you lose it all. The power of patience and consistency. Many beginners make the mistake of jumping in and out of the market based on emotions. Pro investors know the secret. Wealth is built through patience and consistency. Stick to your plan. Make steady investments over time. Don't be distracted by noise. When the market is down, look for opportunities. When it's up, take profits strategically. Over time, your portfolio will grow steadily and sustainably. The role of research and due diligence. The crypto market is flooded with projects. Not all are legitimate or built to last. Pro investors do their homework. Join project communities and forums. Read white papers and technical documents. Follow trusted analysts and experts. Avoid FOMO-driven investments. Due diligence protects you from scams and helps you find genuine opportunities. Psychological mastery. Handling wins and losses. Even pro investors face losses. The difference is how they handle them. Learn from mistakes instead of dwelling on them. Avoid revenge trading, trying to recover losses with risky moves. Celebrate wins, but don't get overconfident. Maintain emotional balance. Your best trades come from calm decisions. Your mindset shapes your results. Think like a pro. Act like a pro. Scaling your portfolio over to me as you gain experience and confidence. You can start to increase your position sizes gradually. Experiment with advanced strategies like staking, lending, or yield farming. Explore promising altcoins carefully. Build passive income streams within the crypto ecosystem, but always remember, never sacrifice your principles or risk management for potential gains. Final thoughts. Becoming a pro investor isn't about luck or insider secrets. It's about discipline, education, and consistency. It's about developing a plan and following it, managing risk and controlling emotions, growing your knowledge and skills every day. By mastering these skills, you're positioning yourself not just to survive the crypto markets, but to thrive. In the next chapter, we'll explore advanced strategies for growing your wealth, including how to use decentralized finance and other tools to maximize your returns. You're no longer a beginner, you're becoming a pro. Let's keep moving forward. DeFi, NFTs, and beyond. By now, you've mastered the basics of cryptocurrency investing and developed the mindset of a pro investor. But the crypto world doesn't stop at Bitcoin and Ethereum. Today, the most exciting innovations are happening in areas known as DeFi and NFTs, two revolutionary concepts that are reshaping finance, ownership, and the digital economy. In this chapter, we'll explore these new frontiers, what they are, why they matter, and how you can approach them wisely to grow your wealth and stay ahead. What is DeFi? Decentralized finance. Explained. DeFi, short for decentralized finance, is a rapidly growing ecosystem of financial applications built on blockchain technology, primarily Ethereum and compatible networks. Unlike traditional finance, which relies on banks, brokers, and intermediaries, DeFi aims to cut out the middlemen. It offers financial services directly to anyone with an internet connection, using smart contracts, self-executing code that automatically enforces rules and agreements. Why DeFi matters? Think about the last time you tried to get a loan, send money abroad, or earn interest on your savings. It involved paperwork. It involved middlemen charging fees. It involved delays and limitations. DeFi changes this by offering permissionless access. Anyone can use DeFi apps, regardless of location or background. Lower costs, no banks or brokers charging high fees. Transparency. All transactions are recorded on public blockchains, visible to everyone. Automation. Smart contracts handle agreements automatically, reducing risk and error. Popular DeFi applications. Some of the most common DeFi uses include lending and borrowing. Platforms like Aave and Compound let you lend your crypto and earn interest or borrow funds by using your crypto as collateral. Decentralized exchanges, DEXs. Unlike centralized exchanges, DEXs like Uniswap allow you to trade directly with others without intermediaries. Yield farming and staking, strategies where you lock your crypto into protocols to earn rewards or additional tokens. Stablecoins, cryptocurrencies pegged to stable assets like the US dollar, widely used in DeFi to reduce volatility, risks, and cautions in DeFi. DeFi is powerful but still experimental. There are risks you must understand. Smart contract bugs, flaws in code can lead to hacks or loss of funds. Impermanent loss, when providing liquidity, price changes can temporarily reduce your holdings' value. Regulatory uncertainty, governments may introduce new rules that impact DeFi platforms. Scams and rug pulls, some projects are fraudulent or abandoned by developers. How to approach DeFi safely. Start small and only invest what you can afford to lose. Use well-known and audited platforms. Keep your software updated and practice strict security habits. Educate yourself continuously. DeFi evolves quickly. What are NFTs? Non-fungible tokens. NFTs, or non-fungible tokens, are unique digital assets verified on a blockchain. Unlike cryptocurrencies such as Bitcoin, which are fungible, each unit is identical. NFTs are one of a kind. NFTs can represent anything digital: art, music, videos, collectibles, game items, virtual real estate, and more. Why NFTs are revolutionary? Before NFTs, digital items were easy to copy or fake. NFTs introduce verifiable ownership and provenance to the digital world. Imagine owning a digital piece of art that is authenticated by the blockchain, cannot be duplicated or stolen, traceable through its entire history. This opens new opportunities for artists, creators, gamers, and collectors, and it's creating a new economy around digital goods. Examples of NFT use cases: digital art. Artists sell unique works directly to fans. Collectibles, trading cards, virtual pets, or rare items in games. Music and media. Musicians release exclusive tracks or experiences. Virtual real estate, buying land in virtual worlds like Decentraland. Identity and access. NFTs can act as digital passports or tickets. How to get started with NFTs? Explore marketplaces like OpenSea, Rarible, or Foundation. Research the creators and communities behind projects. Set a budget and start with small purchases or free drops. Understand the gas fees, transaction costs, and how they affect buying and selling. Beyond DeFi and NFTs, the future of crypto, the blockchain space, is evolving fast. Beyond DeFi and NFTs, you'll hear about Web3, a decentralized internet where users control their data and identity. Metaverse, immersive virtual worlds blending gaming, socializing, and commerce. Layer 2 solutions, technologies that make blockchain faster and cheaper. Cross-chain protocols, connecting different blockchains for greater interoperability. How to stay ahead, keep learning. Subscribe to trusted news sources, join communities, and attend events. Experiment responsibly. Try small amounts in new projects. Maintain your core portfolio. Don't abandon fundamentals chasing the next big thing. Balance risk and reward. Innovation brings opportunity, but also risk. Final thoughts: DeFi and NFTs represent the cutting edge of crypto innovation. They offer unprecedented ways to earn, create, and own value, but they also demand knowledge, caution, and continuous learning. As you explore these new frontiers, remember your foundation: a disciplined mindset, strong security, and smart investing principles will guide you through excitement and uncertainty alike. You are no longer just a beginner. You are a participant in a global financial revolution. In the next chapter, we'll talk about how to protect your wealth, avoid scams, and navigate the complex regulatory environment. The journey continues. Avoiding scams, FOMO, and mistakes. As exciting as the world of cryptocurrency is, it's also a place filled with pitfalls. Scams lurk behind flashy promises. Fear of missing out, FOMO, can cloud your judgment, and mistakes, some costly, are all too common. In this chapter, you'll learn how to protect yourself from these dangers, develop a disciplined approach, and build a lasting, successful crypto journey. Understanding why scams exist. Where there is opportunity, there will be bad actors. Crypto's rapid growth and decentralized nature make it an attractive playground for scammers. Some reasons scams thrive in crypto: lack of regulation. Many projects operate in gray areas or entirely outside regulatory oversight. Anonymity. Scammers often hide behind anonymous wallets or fake identities. Complexity. Beginners may not understand the technology well enough to spot red flags. Greed and hype. Promises of quick riches make people vulnerable to deception. Common types of crypto scams: phishing attacks, fake websites, or emails designed to steal your login credentials or private keys. Always double-check URLs and never share your seed phrase. Ponzi schemes and pyramid schemes. These scams promise high returns by paying old investors with new investors' money. Eventually, the scheme collapses. Rug pulls. Developers launch a project, pump the token's price, then withdraw all funds, leaving investors with worthless coins. Fake ICOs and token sales. Fraudulent projects raising funds without delivering anything. Impersonation scams. Scammers pretend to be influencers, support staff, or well-known figures asking for funds or information. How to spot a scam: unrealistic promises. If it sounds too good to be true, it probably is. Lack of transparency. No clear team, roadmap, or code available. Pressure tactics. Urgency to invest quickly or miss out. Anonymous teams. Legit projects usually have identifiable teams. Poor or no audits. No independent security reviews of smart contracts. Suspicious communication. Poor grammar, unprofessional behavior, or unsolicited messages. Protecting yourself against scams: use official websites and verified apps only. Never share your private keys or seed phrases. Enable two-factor authentication everywhere. Research every project thoroughly before investing. Join trusted communities and ask questions. Keep your software and wallets updated. Use hardware wallets for larger holdings. What is FOMO and how to control it? FOMO, or fear of missing out, is one of the biggest enemies of successful investing. That it's the emotional impulse to buy a coin or join a trend because everyone else is doing it, even if you don't fully understand it. FOMO leads to buying at the top of a pump, ignoring your own research or rules, chasing quick profits that evaporate fast. Strategies to beat FOMO: stick to your plan, have clear entry and exit rules. Take a step back, pause and ask, am I investing because of logic or emotion? Set limits. Only allocate a fixed amount to high-risk trades. Avoid hype. Limit exposure to social media noise. Practice patience. Remember, good opportunities will come again. Common mistakes beginners make: ignoring security, leaving coins on exchanges, or using weak passwords. Overtrading, trying to time every move and paying high fees. Ignoring risk management, investing too much in a single asset. Chasing hype, jumping into trending coins without research. Neglecting education, not keeping up with changes in the market or technology. Emotional trading, making decisions based on fear or greed rather than logic. Learning from mistakes. Everyone makes mistakes. The key is to learn and adapt. Keep a trading journal to record your decisions and emotions. Review wins and losses objectively. Adjust your strategies based on experience. Seek advice from trusted mentors or communities. Be patient with yourself. Mastery takes time. Building a resilient crypto journey. Avoiding scams, controlling FOMO, and learning from mistakes will help you build resilience. Remember, security is non-negotiable. Protect your assets like you would your most valuable possessions. Discipline trumps impulse. The market will test you, but your plan keeps you steady. Education is ongoing. The crypto space evolves, and so must you. Mistakes are teachers. Use them to grow stronger. Final thoughts. Crypto can be a wild ride, but it doesn't have to be dangerous or overwhelming. Be wise. Staying vigilant, controlling your emotions, and committing to continuous learning, you'll avoid the common traps that catch many beginners. That you're building not just a portfolio, but a skill set and mindset that will serve you for life. In the next and final chapter, we'll talk about building your legacy, how to sustain your wealth, plan for the future, and share your success. Your journey is far from over. In fact, it's just beginning. Let's keep moving forward. Building generational wealth. Congratulations. You've traveled far, from understanding cryptocurrency basics to mastering investments, navigating market cycles, and avoiding common pitfalls. Now, the most important chapter begins: using your knowledge and assets to build wealth that lasts beyond your lifetime. This chapter is about turning your crypto gains into generational wealth. Wealth that supports not only you, but your family, your community, and future generations. What is generational wealth? Generational wealth is wealth passed down from one generation to the next. It's about creating a financial legacy, assets that provide security, opportunity, and freedom for your children, grandchildren, and beyond. Unlike short-term gains or temporary success, generational wealth is built with patience, planning, and smart decisions. Why crypto can be a powerful tool for legacy building. Cryptocurrency offers unique advantages for building generational wealth. Accessibility. Anyone can participate globally without traditional banking barriers. Portability. Crypto can be accessed anywhere in the world with your keys. Growth potential. Early investments can multiply exponentially. Innovation. Blockchain technology enables new ways to store, protect, and transfer wealth. But to harness these benefits, you must think beyond just buying and selling coins. You must plan strategically, steps to building generational wealth with Crypto One. Secure and diversify your holdings. Use hardware wallets or secure custody solutions to protect your assets. Don't keep all your crypto in one place or one type of asset. Diversify between Bitcoin, Ethereum, stablecoins, and promising altcoins to balance growth and stability. Point 2. Create a clear estate plan. Your crypto assets need to be part of your broader estate planning. Write a will that includes your crypto holdings. Assign trusted heirs or executors who understand how to access your wallets. Consider using multi-signature wallets that require multiple parties to approve transactions. Use trusted legal advice familiar with digital assets. Estate planning ensures your assets don't get lost or inaccessible after you're gone. Point 3. Educate your family. Generational wealth isn't just money, it's knowledge. Teach your family about cryptocurrency basics, security, and responsible investing. Share your journey, your lessons, and your mindset. Help them develop financial literacy and discipline. Passing down knowledge helps preserve and grow your legacy. Point 4. Consider passive income strategies. Look beyond holding assets. Use crypto to generate ongoing income. Staking, lock coins to support blockchain networks, and earn rewards. Lending, provide crypto loans and earn interest. Yield farming, Participate in DeFi protocols to maximize returns. These strategies can create sustainable cash flow that supports your family. Point 5. Plan for taxes and compliance. Crypto regulations vary globally, but can impact your wealth transfer. Understand tax obligations related to gains, inheritance, and gifts. Work with professionals to stay compliant and optimize your estate tax strategy. Mindset for long-term wealth building. Generational wealth requires a shift from short-term thinking to long-term vision. Patience. Wealth grows steadily through compounding, not overnight. Responsibility. Your decisions affect future generations. Stewardship. Protect and grow your assets with care and foresight. Legacy. Think about the kind of future you want to leave behind. The role of philanthropy and impact. Generational wealth also offers an opportunity to give back. Consider charitable giving or establishing a family foundation. Use crypto philanthropy platforms to support causes you care about. Inspire your family to use wealth responsibly and compassionately. Final thoughts. Building generational wealth with crypto is a profound journey. It's about more than money. It's about creating lasting security, opportunity, and freedom that you've already made powerful strides. Now it's time to think big, beyond yourself and into the future. The knowledge, discipline, and wisdom you've developed will help you leave a legacy that transcends time. Remember, wealth built wisely today becomes the foundation for generations to come. Mastering crypto security, protecting your digital fortune. As you grow your crypto portfolio, one truth becomes clear: security is everything. No matter how much you earn or how savvy your investments, without strong protection, your digital fortune can vanish in an instant. Crypto security is unlike traditional finance. You are your own bank. You control your keys, and with control comes responsibility. This chapter will guide you through everything you need to know to safeguard your crypto assets confidently and effectively. Why crypto security matters more than ever. Unlike money in a bank, crypto funds are stored on blockchains, accessible only via private keys or seed phrases. If these keys are lost or stolen, your funds are gone forever. There is no customer service hotline, no central authority to reverse transactions. Hackers, scammers, and malware are constantly looking for vulnerabilities. Even simple mistakes, like phishing emails or weak passwords, can cost you dearly. Security isn't just a precaution, it's the foundation of your crypto success. The fundamentals: private keys and seed phrases. Your private key is a secret alphanumeric code that proves ownership of your crypto wallet. Your seed phrase, or recovery phrase, is a set of 12 to 24 words that can regenerate your wallet if lost. Never share your private key or seed phrase with anyone. Never store them digitally in unencrypted files or online. Think of these as the keys to your vault. Losing them means losing access. Sharing them means risking theft. Wallet types and their security levels. Choosing the right wallet is the first step in securing your assets. Hot wallets. Software wallets connected to the internet, mobile apps, desktop apps, browser extensions. Pros: convenient for frequent trading and DeFi use. Cons: vulnerable to hacks and malware if your device is compromised. Cold wallets. Offline wallets not connected to the internet, such as hardware wallets or paper wallets. Pros: much safer from hacking attempts. Cons: less convenient for quick trades, require careful physical storage. Hardware wallets. Physical devices like Ledger or Trezor that store your keys offline. The gold standard in crypto security for long-term holders. Always buy hardware wallets from official sources to avoid tampering. Best practices for managing your keys and wallets. Use hardware wallets for the bulk of your holdings. Keep only small amounts in hot wallets for trading or spending. Back up your seed phrase securely. Write it down on paper and store it in multiple safe places: a safe deposit box, a secure home safe. Never take screenshots or store seed phrases digitally. Use multi-signature wallets. These require multiple private keys to approve a transaction, reducing risk of theft. Regularly update your wallet software to patch security vulnerabilities, guarding against phishing and scams. Phishing attacks trick you into revealing keys or credentials through fake websites, emails, or messages. Always verify URLs before entering. Credentials. Bookmark trusted sites. Be cautious of unsolicited emails or social media messages claiming to be support. Never click on suspicious links or download unknown attachments. Use email filters and antivirus software to reduce risk. Securing your devices. Your security is only as strong as your devices. Keep your operating system and apps up to date. Use strong, unique passwords for all crypto-related accounts and enable two-factor authentication, 2FA. Prefer authenticator apps, Google Authenticator, Authy, over SMS for 2FA. Avoid public Wi-Fi or use a trusted VPN when accessing crypto accounts. Handling exchanges safely. Centralized exchanges, CXs, are convenient but carry risks. Use exchanges with strong security records and insurance policies. Keep only trading funds on exchanges. Withdraw the majority to your personal wallets. Enable all security features, including withdrawal whitelist and 2FA. Be aware of phishing scams impersonating exchanges. What to do if you suspect a breach? Immediately transfer your funds to a secure wallet if possible. Change all related passwords and security settings. Report to the exchange or service provider. Inform community forums or security groups to warn others. The human factor. Training your mind for security. Security isn't just about tools, it's about habits. Stay vigilant and skeptical of unsolicited advice or too good to be true offers. Take time to double-check before making any transaction. Treat your crypto keys as you would your most valuable physical possessions. Educate yourself continuously. Crypto security evolves constantly. Taxation and legal considerations in crypto investing. As your crypto portfolio grows, understanding the legal and tax landscape becomes crucial. Navigating the complex and evolving regulations protects you from costly mistakes, penalties, and legal trouble. This chapter guides you through what you need to know to stay compliant and optimize your crypto tax situation. Why tax and legal awareness matters. Cryptocurrency operates in a decentralized, global environment. Yet, governments worldwide are increasing oversight to ensure taxes are paid and laws followed. Ignoring tax obligations can lead to significant fines and penalties, legal investigations or audits, freezing of assets or accounts, stress and uncertainty. Being proactive and informed helps you protect your wealth and peace of mind. How different countries treat cryptocurrency. Crypto taxation varies widely across jurisdictions. Some countries classify crypto as property, subjecting gains to capital gains tax. Others treat it as currency, applying income tax rules. A few have favorable or no crypto tax policies, attracting investors. Regulatory clarity is improving but still patchy and changing rapidly. Always check local laws and consult a professional. For personalized advice, common taxable events in crypto. Generally, tax authorities consider the following as taxable: selling crypto for fiat currency, realizing a capital gain or loss, trading one cryptocurrency for another. This triggers a taxable event. Using crypto to buy goods or services may incur taxable gains. Receiving crypto as income from mining, staking rewards, or payment for services, airdrops and forks may be treated as income. Capital gains tax. The basics. Capital gains are profits from selling or disposing of an asset. Short-term gains from assets held less than a year, often taxed at higher rates. Long-term gains from assets held longer, often taxed at lower rates. Calculating your gain involves gain equals sale price, cost basis, purchase price plus fees. Keep accurate records of all transactions, dates, and values to calculate gains properly. Record keeping and reporting. Good record keeping is essential for compliance. Track every buy, sell, trade, and transfer. Record dates, amounts, prices, fees, and counterparties if possible. Use crypto tax software tools to automate tracking and reporting. Keep supporting documents like invoices and exchange statements. Accurate records make tax filing easier and protect you if audited. Tax strategies for crypto investors. While taxes can feel burdensome, smart strategies help you minimize liabilities. Use tax loss harvesting. Sell assets at a loss to offset gains. Hold long-term. Benefit from lower long-term capital gains rates. Gift crypto. Some jurisdictions allow gifting crypto tax-free up to a limit. Donate crypto to charity. May offer tax deductions. Choose tax-efficient wallets and exchanges, those with good reporting tools. Legal considerations beyond taxes. Taxation is just one part of the legal picture. Know your KYC/AML obligations. Exchanges require identity verification to comply with laws. Beware of securities laws. Some tokens may be classified as securities subject to regulations. Stay informed on DeFi regulations. These are rapidly evolving and can affect your activities. Understand international laws. If you hold or trade across borders, compliance can be complex. Working with professionals, crypto tax and legal matters can be complicated. Consider hiring accountants or tax advisors who specialize in crypto. Consulting legal experts for estate planning and compliance. Using reputable crypto tax software for record keeping and reporting. Professional advice saves you time, money, and stress. The future of crypto regulation. The regulatory landscape is evolving quickly. Governments are drafting clearer rules and enforcement policies. International cooperation is increasing to combat tax evasion and fraud. New regulations on NFTs, DeFi, and stablecoins are emerging. Staying informed and adaptable will keep you ahead of changes and help you adjust your strategies. Advanced trading strategies. Beyond the basics, as you progress on your crypto journey, mastering basic buy and hold investing is a strong foundation. But to truly elevate your results and seize more opportunities, you need to explore advanced trading strategies. These tactics allow you to capitalize on market volatility, hedge risks, and potentially amplify your returns. But they also require discipline, knowledge, and careful risk management. In this chapter, we'll dive into several proven advanced strategies, explaining how they work and how to approach them wisely. Point 1. Swing trading. Riding the medium-term wave. Swing trading involves capturing profits from price swings over days or weeks rather than seconds or months. You look for trends and patterns that signal potential reversals or continuations. Tools include technical indicators like moving averages, RSI, relative strength index, and MACD. It requires patience and timing, but less intense monitoring than day trading. Swing trading can generate consistent profits by buying low and selling high within established price channels. Point 2. Using leverage. Amplifying your trades. With caution, leverage lets you borrow funds to increase your position size. For example, with 5x leverage, a $1,000 investment controls $5,000 worth of crypto. It can multiply your gains dramatically, but losses are also magnified, increasing risk. Always use leverage cautiously. Know your maximum loss and set strict stop-loss orders. Many exchanges offer leverage, but be sure you understand their rules and fees. Leverage is a powerful tool, but it's not for beginners. Start small and use it only as part of a disciplined plan. Point 3. Options and futures. Hedging and speculation. Futures contracts allow you to agree today on buying or selling crypto at a future date and price. They let traders speculate on price direction without owning the asset. Useful for hedging your portfolio against downside risk. Futures trading involves margin requirements and can be complex. Options give you the right, but not the obligation, to buy or sell at a specific price within a set period. They provide flexibility and can be used to generate income or protect positions. Option strategies include calls, puts, spreads, and more. Both tools require learning and practice. Many platforms offer demo accounts. Use these to build confidence before risking real money. Point 4. Arbitrage. Exploiting price differences. Arbitrage involves buying crypto on one exchange where the price is lower and selling on another where it's higher, profiting from the difference. This requires fast execution and low fees. Arbitrage opportunities can be fleeting as markets become more efficient. Cross-border or cross-chain arbitrage requires technical know-how. Arbitrage can be a low-risk way to profit, but it demands access to multiple accounts and careful coordination. Point 5. Algorithmic and automated trading. Algorithmic trading uses computer programs to execute trades based on predefined rules. Bots can monitor markets 24/7 and react faster than humans. You can set parameters for entry, exit, stop losses, and take profits. Automation reduces emotional decisions and increases consistency. However, algorithms must be tested rigorously. Poorly programmed bots can cause losses. Many platforms offer simple bot building tools or marketplaces for buying strategies. Point 6. Diversifying with altcoins and tokens. While Bitcoin and Ethereum dominate, Many altcoins offer unique opportunities and risks. Explore projects with strong fundamentals, utility, and communities. Allocate a portion of your portfolio to promising altcoins to increase potential gains. Use technical and fundamental analysis to assess entry and exit points. Remember, altcoins can be more volatile and risky. Balance potential rewards with your risk tolerance. Point 7. Risk management. Your trading lifeline advanced strategies bring higher rewards but also greater risk. Always use stop-loss orders to limit downside. Avoid risking more than a small percentage of your portfolio on a single trade. Keep position sizes manageable and aligned with your risk tolerance. Regularly review and adjust your strategies. Building a crypto portfolio for different life stages. Investing is not a one-size-fits-all journey. As you grow older, your financial goals, risk tolerance, and responsibilities change. The way you build and manage your crypto portfolio should evolve with you. In this chapter, we will explore how to design a crypto portfolio tailored to your current life stage, whether you're just starting out, in your prime earning years, or preparing for retirement, and how to adapt it over time to meet your changing needs. Why life stages matter in investing. Your priorities and risk capacity vary dramatically through different phases of life. When you're young, you can afford to take more risks for potentially higher returns. As you approach major milestones like buying a home or starting a family, preserving capital and reducing volatility becomes important. In later years, income generation and capital protection take priority. Adjusting your crypto investments accordingly helps you align with your goals while managing risk wisely. Stage 1. Early career and wealth building, 20s to early 30s. At this stage, you have the advantage of time, which means you can take higher risks with a larger allocation to growth-oriented assets. Invest in volatile altcoins and emerging projects that have high upside potential. Use dollar cost averaging to steadily accumulate crypto without trying to time the market. Consider small positions in DeFi protocols or NFTs to explore innovative areas. Your portfolio here should focus on capital appreciation. Losses can be weathered because you have years to recover. Stage 2. Mid-career and wealth accumulation, mid-30s to 50s. In your prime earning years, financial responsibilities often increase. You may have a mortgage, family, and other commitments. Risk tolerance often decreases. Preserving gains becomes as important as growing them. Portfolio strategies. Increase allocation to blue-chip cryptocurrencies like Bitcoin and Ethereum for stability. Gradually reduce exposure to highly speculative altcoins. Incorporate stablecoins or staking protocols to generate passive income. Start building a diversified portfolio across different crypto sectors and traditional assets. Maintain a portion for higher risk opportunities, but keep it controlled. This balanced approach helps protect your wealth while still capturing growth. Stage 3. Pre-retirement and retirement, 50s and beyond. As retirement nears or arrives, your focus shifts to capital preservation, generating reliable income, minimizing volatility. Portfolio adjustments include heavy weighting in Bitcoin and stablecoins. Bitcoin has shown resilience and is considered digital gold. Use of staking and lending platforms to earn steady yields. Avoid speculative tokens and high-risk projects. Consider diversifying into traditional assets alongside crypto to reduce overall portfolio volatility. Plan your crypto withdrawals carefully to meet living expenses without jeopardizing your capital. General tips for portfolio building at any stage. Diversify. Don't put all your eggs in one basket. Spread across coins, sectors, and strategies. Rebalance regularly. Markets change, so adjust allocations to maintain your target risk level. Use dollar cost averaging. This smooths out volatility and reduces emotional trading. Stay informed. Follow market trends, technology developments, and regulatory changes. Maintain an emergency fund. Never invest money you might need urgently. Portfolio examples by life stage. Example portfolio for early career. 60% in Bitcoin and Ethereum, 30% in promising altcoins and DeFi projects, 10% in NFTs or experimental tokens. Example portfolio for mid-career, 50%. Bitcoin and Ethereum, 20% in stablecoins and staking protocols, 20% diversified altcoins with strong fundamentals, 10% cash or fiat For flexibility, example portfolio for retirement, 70% Bitcoin and stablecoins, 20% in staking and lending. For income, 10% cash or conservative investments, adjusting your portfolio over time. Your portfolio isn't static. Review it at least annually or after major life events. Change in income or expenses, marriage or family growth, career changes or relocation. Market shifts or regulatory updates. Being proactive helps you stay aligned with your goals. The future of crypto, trends, innovations, and opportunities. The world of cryptocurrency is evolving at an astonishing pace. What once started as a digital alternative to money has blossomed into a vast ecosystem of innovation, disruption, and opportunity. As you progress in your crypto journey, understanding where the industry is headed can position you to capitalize on the next wave of breakthroughs. In this chapter, we'll explore the major trends shaping the future of crypto, groundbreaking innovations on the horizon, and the exciting opportunities they present. Web3, the decentralized internet. At the heart of the crypto future is Web3, a new paradigm for the internet that puts users in control of their data, identity, and digital interactions. Unlike the current Web 2 dominated by centralized platforms, Web 3 leverages blockchain and decentralized protocols to enable peer-to-peer communication without intermediaries, allow users to own and monetize their data securely, create decentralized applications, dApps, that run transparently on blockchains. Web 3 promises to reshape social media, finance, gaming, and many other sectors, fostering a more open, user-centric internet. Layer 2 solutions, scaling blockchain. Scalability has been a major challenge for blockchains like Ethereum, leading to high fees and slow transactions during peak demand. Layer 2 solutions address this by building protocols atop existing blockchains that handle transactions off-chain, then settle on-chain. Examples include rollups that batch multiple transactions into one, state channels enabling instant, low-cost exchanges, sidechains that operate parallel to main chains. Layer 2 technologies will make crypto faster, cheaper, and more accessible to mainstream users. Decentralized finance, DeFi. Evolution. DeFi is expanding beyond basic lending and trading. Introduction of protocols for derivatives, insurance, and synthetic assets. Increased integration with traditional finance institutions. Development of cross-chain interoperability, connecting different blockchains seamlessly. Focus on improving security through better audits and insurance products. DeFi's growth offers new financial tools accessible to everyone, revolutionizing how we save, invest, and borrow. Non-fungible tokens, NFTs, and digital ownership. NFTs are evolving from digital collectibles to broad applications in virtual real estate and metaverse worlds. Intellectual property rights management. Tokenized physical assets like real estate and art. Access tokens for memberships, events, or services. NFTs will redefine ownership and monetization in both digital and physical realms. The metaverse. Virtual worlds and economies. The metaverse combines virtual reality, augmented reality, and blockchain to create immersive digital spaces. Users can socialize, work, play, and trade assets securely. Crypto tokens and NFTs form the backbone of metaverse economies. Companies and brands are investing heavily in metaverse platforms. The metaverse is not just gaming, it's a new frontier for commerce, creativity, and community. Institutional adoption and regulation. More institutional investors and corporations are entering crypto, bringing greater liquidity and market maturity. Increased pressure for clear regulations and compliance. Development of custodial services and regulated investment products. While regulation adds complexity, it also signals crypto's growing legitimacy and mainstream acceptance. Emerging technologies. Impacting crypto. Artificial intelligence. AI enhances trading algorithms, risk management, and decentralized governance. Internet of Things. IoT enables smart devices to transact autonomously via blockchain. Zero-knowledge proofs. Improve privacy and scalability by allowing transaction verification without revealing data. These technologies will amplify crypto's capabilities and adoption. How to position yourself for the future. Stay informed through trusted news, research, and communities. Continue learning new skills and adapting your strategies. Experiment cautiously with emerging sectors like DeFi 2.0, NFTs, or metaverse projects. Focus on long-term trends rather than short-term hype. Maintain strong security and risk management practices. Final chapter, you're not late. You're early. If there's one message to take away from this entire journey, it's this. You're not late to crypto. You're early. Many people hesitate to enter the crypto space because they believe they've missed the boat. Headlines often highlight those who got in early and made millions overnight, creating a false narrative that the opportunity is past. But nothing could be further from the truth. Why it's never too late history shows that groundbreaking technologies take time to mature. The internet, smartphones, and personal computers all went through long growth phases before reaching mass adoption. Cryptocurrency is still in its infancy. Despite incredible growth, the ecosystem is evolving rapidly, and vast opportunities remain untapped. Mass adoption is still unfolding. Billions of people worldwide have yet to engage with crypto. Innovation continues at a breakneck pace. New projects, protocols, and applications are launched every day. Regulatory frameworks are being established. This will bring legitimacy and open new markets. Institutional and corporate involvement is increasing. This fuels infrastructure and stability. This means that while the early movers had advantages, today's investors can still build meaningful wealth by learning, adapting, and acting wisely. The power of starting your crypto journey today gives you access to a more mature, safer market than ever before. The ability to learn from others' mistakes and successes. Tools and resources to invest smarter and more securely. Opportunities to participate in innovative sectors like DeFi, NFTs, and the metaverse. Time on your side to compound your investments and knowledge. Remember, time in the market beats timing the market. Early or late is less important than consistent. Informed action. How to make the most of this moment. Commit to continuous learning. Crypto evolves quickly. Stay curious and updated. Develop discipline and patience. Avoid chasing hype or shortcuts. Focus on security. Protect your assets from scams and hacks. Build a diversified portfolio. Balance risk and growth opportunities. Engage with communities. Learn from experienced investors and thought leaders. Plan for the long term. Think beyond quick profits to building lasting wealth. Overcoming fear and doubt. It's normal to feel overwhelmed or skeptical entering a new world. Fear, uncertainty, and doubt are common but manageable. Break learning into small, manageable steps. Seek trustworthy mentors or resources. Remember that every expert was once a beginner. Celebrate small wins and progress. Your mindset will shape your results more than the market itself. Your role in the crypto revolution. You are part of a global movement reshaping finance, technology, and culture. By embracing crypto thoughtfully and responsibly, you contribute to a more open, inclusive, and innovative future. Your journey from zero to crypto millionaire is not just about personal gain. It's about participating in a revolution that empowers people worldwide. Final words of encouragement. There will be ups and downs. Markets will fluctuate, technologies will change, and challenges will arise. But your commitment, knowledge, and resilience will carry you through. You have all the tools you need. The crypto gold rush of our time is still unfolding, and the best chapters are yet to be written. So, step forward confidently. You are early. You are ready. Your future in crypto starts now. Thank you for joining this journey. Here's to your success, growth, and lasting legacy in the world of cryptocurrency.